Greetings and welcome to this week's edition of 401k Real Talk. This is Fred Barstein, contributing editor for wealthmanagement.com's RPA Edge omnichannel. I review all of the industry stories from the past week and pick out the 5 most interesting and important ones for you, providing open, honest, and candid discussion you will not get anywhere else. So let's get real. Yet another sign that the RPA M&A market remains red hot. Private equity-backed World Insurance recently acquired Pensionmark, including their RIA, broker-dealer, and advisor support platform, which means there's new buyers in the RPA market. Over 10 years ago, CapTrust took a minority interest in Pensionmark, and it was assumed then that they would eventually buy the whole company. But with their focus on wealth management, it appears that CapTrust is moving in a different direction. So of the $80 billion in assets for advisors using Pensionmark, it's estimated that about 40% are also part of the acquisition, which was advised in part by the WiseRhino Group. There are several hybrid RPA platforms that serve both acquired and independent RPAs like Hub with GRP Financial, NFP and RPAG, and One Digital, but now Pensionmark, but just a couple like SRP and the budding Accelerate Retirement serve the independent only. There's continued interest by P&C and benefit firms like World Insurance in RPA firms, including NFP, Hub, One Digital, Marsh Mac, Gallagher, Allianz, Alera, list goes on. And their interest is cross-selling retirement and insurance to plan sponsors. Yet Lockton, which had $110 billion in retirement, huge P&C and benefits firm, sold to Creative Planning because they did not think that they could develop a competitive wealth management business. Second story is about another aggregator. Sageview continues its foray into the wealth management business, hiring Jim Doria, former head of product at TD Ameritrade, and he will focus on the organic growth. Sageview expects to acquire additional wealth management firms led by Jeremy Hawley, who they hired from LPL. And they're looking to partner these wealth management firms with their 30 or so RPA offices. They recently made an acquisition of a $1.8 billion RIA in Michigan, as well as Capital One's $900 million wealth management business. With 1.5 million participants and private equity-backed capital, Sageview, like other RPA aggregators, are looking to cross-sell financial services to participants. Remember, it's all about the convergence of wealth, retirement, and benefits at work. Third story is the Wall Street Journal is reporting that workers in highly skilled areas like computer programming, writing, consulting, and information technology, more of them prefer to be an independent contractor, believing they can make more money, but probably more importantly, increase flexibility and control of their lives, giving up security of a full-time job and climbing the corporate ladder. A whopping 36% of the U.S. workforce is now categorized as freelance, but there's a spike for the skilled workers. What's the impact for the future of benefits? Because the freelancers don't have that. Some have spouses that might have access, but it's just another effect of the pandemic, which companies have to navigate. Can they pivot to attract and manage this new workforce, which is another opportunity for RPAs to help clients win the war for talent? Fourth story is about the both consumer advocates and their counterparts have concerns about the DOL's new fiduciary rule with enforcement to go into effect the end of June. Consumer groups in a letter to the DOL complain that the many loopholes can give rise to conflicts of interest, and the more conservative opponents have filed suit in the Fifth Circuit, citing overreach by the DOL, which derailed the previous rule in 2018 in the same circuit court. At issue is the 5-part fiduciary test, specifically whether advising a new client on an IRA rollover constitutes an ongoing relationship and invoking fiduciary protection. All of this would require an RIA to become familiar with their client's DC plan, investments, and pricing when recommending a rollover to determine if it's actually in their best interest. And then the final story is a seminal podcast just released with the WiseRhino Group founder and longtime industry veteran Dick Darien, who explores the question of whether RIAs that ignore this DC market are actually at risk. So more RPA aggregators and 401k record keepers are building machines to capture rollovers, mine for wealth management clients, and sell a broad array of financial products to the estimated 90 million DC participants. And with the DOL rule potentially inhibiting rollovers, the focus on retirement income, as well as state mandates increasing the number of plans available, Darien argues that RIAs should understand the opportunities of working with DC clients, as well as the risk of ignoring them, even if they do not want to become RPA specialists. It's also good fodder for RPAs that are looking to partner or acquire RIAs. So those were the 5 most important stories that I thought from last week. I listed 5 others, including whether PE should be in 401k plans, the Vanguard target date lawsuit, and the conflicting rules and recommendations by the SEC and the DOL on cybersecurity. Please let me know if I missed anything, if you had any comments. I would love to hear from you. Otherwise, I will speak to you next week on 401k Real Talk, which is now available on wealthmanagement.com's RPA Edge Omni channel.